You know, for decades, the US dollar has been the undisputed king of global finance. It's just the way things are. But that crown, it's starting to look a little wobbly. So today, we're going to break down the powerful forces that are challenging the dollar's reign and figure out what it all means for, well, pretty much everyone.
Okay, so here's how we're going to tackle this. First, we'll look at the dollar's long history on the throne. Then, we'll dig into why it seems to be fading. After that, we'll uncover this kind of hidden geopolitical safety net that's holding it up, see who actually wins in a weaker dollar world, and finally, ask the big question, is the king really being dethroned?
Ever since the end of World War II, really, the US dollar has been way more than just money. It's been the bedrock of the entire global economy. It's the currency everyone runs to for trade, for investment, and for safety. But that long, unquestioned reign is now being, well, it's being questioned.
And that questioning is getting pretty loud. I mean, this quote from market analysts at State Street Global Advisors just nails the mood perfectly. The era of easy dollar dominance, what they call the free lunch, might just be coming to an end. And that's forcing a major rethink for investors and entire countries all over the world.
So before we go any further, let's just quickly nail down this key term you see here. Reserve currency. What does that even mean? Well, to put it simply, it's the currency that all the other central banks around the world trust enough to hold in huge amounts. It's the default money for big international deals like buying oil, and it basically acts as a stable anchor for the entire financial system.
All right, so with that in mind, let's get right to the heart of it. Why are so many smart people now arguing that the dollar is heading into a bear market? You know, a long period where it just keeps getting weaker.
A really great way to get your head around this is something called the dollar smile theory. So the dollar gets stronger at the two ends of the smile. One side is a big global crisis when everyone panics and rushes to the dollar for safety. The other side is when the US economy is just absolutely booming. But where analysts think we are right now is in that vulnerable dip in the middle of the smile. The US economy's okay, it's stable, but it's not outperforming the rest of the world like it was, and that creates this downward pressure.
And look, this isn't the first time the dollar's been in trouble, not at all. History shows three other major downturns. Back in '71, you had the Nixon shock, which basically ended the dollar's link to gold. Then in '85, the world's biggest economies actually teamed up to intentionally weaken it in the Plaza Accord. And then from 2002 to 2008, you had these huge deficits and economic shocks that pushed it down again. The patterns we're seeing today, they're starting to look eerily familiar.
So what are the specific cracks in the crown right now? Well, analysts point to four main things. First, just on a basic level, the dollar looks expensive compared to what you can actually buy with it. Second, the US is running these massive twin deficits. That means it's spending way more than it earns, both in its government budget and in its trade with other countries. Third, that whole idea of American economic exceptionalism is starting to fade. And finally, unpredictable policies are starting to wear away at global confidence in US institutions.
And here's the kicker. We are not talking about a small dip here. Some analysts are forecasting a sustained, multi-year decline that could see the dollar fall by at least 15%. That is a huge shift, and it would have massive ripple effects all over the globe.
But it's not quite that simple. Because despite all those flashing red lights from the economy, the dollar isn't just collapsing. And to understand why, we've got to look beyond the economics and into the world of power and politics. And this really brings us to the core puzzle of the dollar paradox, right? If all the economic numbers are pointing down, what invisible force is keeping King Dollar propped up on its throne?
Now this slide is where it gets really interesting. It kind of reveals the dollar's secret weapon, geopolitics. See, this chart, which is based on Fed data, shows who actually owns all those US dollar assets. And the vast majority of it, we're talking nearly 3/4, is held by countries that have military alliances or close ties to the US. These are countries that depend on American security, and they are very, very unlikely to suddenly just dump all their dollars.
And this really illustrates the two-tiered system that's developed. On one side, you've got America's allies. For them, holding dollars is a super low-risk move. But on the other side, you have rivals. And for them, those exact same dollars are a liability, a potential target for sanctions. This creates this incredibly powerful reason for a huge chunk of the world to just stick with the dollar no matter what the interest rates or economic forecasts say.
So, when you get right down to it, trying to replace the dollar is just incredibly difficult. I mean, any challenger would have to tick all of these boxes. You'd need massive, open, and liquid financial markets, a huge economy, a central bank everyone trusts, and, this is the big one, a powerful web of geopolitical alliances. And right now, no other currency, not the euro, not the yuan, even comes close to meeting all those criteria.
Okay, so let's just assume for a minute that the pessimists are right, and the dollar does get weaker, even if it doesn't totally lose its crown. What does that actually mean for the rest of the world? Who wins and who loses?
But for a lot of emerging markets, a weaker dollar is like a massive economic stimulus package. First off, any debt they owe in dollars suddenly becomes cheaper to pay back. Second, their own central banks don't have to jack up interest rates just to defend their currencies. Third, commodity prices, which are almost always priced in dollars, tend to go up. And finally, it makes them look way more attractive to foreign investors. For these countries, this isn't just a small change. It can literally be the difference between a struggling economy and a growing one.
This creates such a fascinating contrast. Think about it. For someone in, say, Brazil or Indonesia, a weaker dollar means imported goods get cheaper. That's great for their wallet. But for a consumer in the US, it's the total opposite. Everything from foreign cars to your new phone gets more expensive, and that squeezes your purchasing power.
Okay, so we've heard the strong economic case for why the dollar should be weaker, and the powerful political argument for why it's so stable. Let's try and bring it all together for a final verdict.
After looking at all the evidence from both sides, what's the final call here? Is the dollar's long reign as the king of currencies really, truly coming to an end? So here's the crucial thing to understand. We have to separate the dollar's price from its role. Economically, yeah, its value's under a lot of pressure, and a bear market seems like a real possibility. But its status as the world's main reserve currency, that looks secure, at least for now. That geopolitical safety net, combined with the simple fact that there's no good alternative, means the crown might be tilting, but it is not falling off.
And that leaves us with one final, really big question to chew on. We've seen how economics are challenging the dollar's value, but the much bigger story, the one to watch over the next decade, is what, if anything, could ever truly challenge its fundamental role at the very center of the global financial system. And that is a question for another day.